today's episode, we are going to look at a very small portion of the One Big Beautiful Bill Act. And as our president, Donald Trump, has said, it's huge. Okay. So there's no way that in one 15 to 20-minute podcast episode, I could cover everything that's included in the bill. So what I want to do is make sure that we hit some of the hot topics that are going to affect us in this tax year for 2025.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 64 of the Tax Relief with Timalyn Bowens podcast. In today's episode, we are going to look at a very small portion of the One Big Beautiful Bill Act. And as our president, Donald Trump, has said, it's huge. Okay. So there's no way that in one 15 to 20-minute podcast episode, I could cover everything that's included in the bill. So what I want to do is make sure that we hit some of the hot topics that are going to affect us in this tax year for 2025. So in today's episode, the small portion that we are going to take a look at of the One Big Beautiful Bill Act is no tax on overtime. Okay? We're going to look at what it is, who it affects, and how long it will be in effect. So to start out, this proposal of no tax on overtime was the No Tax on Overtime Act. It's been incorporated, as I mentioned already, into the One Big Beautiful Bill Act, and it's not quite the way that President Trump described that it would be. Some people have already taken off to the internet and said nobody's going to pay taxes on any overtime. And friends, that is just absolutely incorrect. Okay? What is going to happen in this scenario is that taxpayers must meet certain criteria to be able to deduct their overtime. So yes, it will still show up in are on the tax return in gross income, just like it has been before. But now we're going to have an above the line deduction that is going to allow a maximum of $12,500 to be deducted for single payers and a maximum of $25,000 to be deducted for married taxpayers filing jointly. Now, with some deductions, we have what we call a marriage penalty. Okay. So with those deductions, it's just one amount across the board, which means if you're single, you get the same amount as somebody married filing jointly. An example would be the student loan interest deduction. I don't know too many people who went to college within the past 20 years that don't have student loans. If they file as single, they get to deduct up to $2,500. If they file as married filing jointly, the amount of that deduction does not increase. So I give that example so that you can understand there's no marriage penalty here, which makes this huge for couples who meet the income qualifications who may be working overtime. Okay? So huge win there, but then we have to take a look at the phase outs. So typically, when we are looking at a tax deduction or tax credit, taxpayers have to qualify based on their income. So this deduction is one of those that has an income phase out. But I have to be honest with you, and I always promise to be neutral and just present the facts and not get into politics too much here. This is a pretty high phase out rate, okay? So for single taxpayers and head of household, the phase out starts at $150,000 for taxpayers who have a modified adjusted gross income of that. So what does that mean? When we are looking to purchase homes, to get a loan or something of that sort, lenders typically look at our adjusted gross income, right? So that's going to be your gross income, and then we're going to deduct things such as student loan interest, HSA payments. We're going to deduct any contributions to traditional retirement plans. But this one has switched it up a little bit. Instead of using AGI, it used your modified adjusted gross income, which is going to add back some of those deductions that we previously got to take out for the sake of figuring out the adjusted gross income. So, what does that actually look like? It means that the number is actually going to be a little bit higher than the adjusted gross income because we are going to add back things like those retirement contributions that were made. We're also going to add back things such as like foreign income exclusion. Okay. So, just to get an idea of whether or not you qualified, you can start with your adjusted gross income, which in the 2024 tax year, so the tax return you just filed in the previous 2 years, your adjusted gross income amount is going to be found on line 11. Okay. So if you file as single or you file as married, I'm sorry, if you file as single or head of household, if you're under $150,000, it is likely that you will be able to take the full deduction of $12,500 if you have that much overtime, right? Now, for married filing jointly, the phase out begins at $300. I am so sorry. $300,000. That would be an extreme marriage penalty, right? Now, for every $1,000 over the phase out amount, the deduction is going to be reduced by $100. So let's look at this as an example. Let's say we have a couple, their modified adjusted gross income is $301,000. Okay, so they're $1,000 over the phase out threshold. Because of that, they would not be able to take the full $25,000 overtime deduction. Instead, they would only be able to take 24,900 because for that thousand over, the deduction is going to be reduced by $100. Now, I do want to make note here that for the individual filers and head of household, I already mentioned it's 150. For married filing jointly, we have a phase out level of 300,000. This deduction is not going to be available for married taxpayers who file separately. So, mm, that's something to take into consideration and something that if you work with a professional to do your tax preparation, you may want to weigh the pros and cons of filing separately or jointly. Now, I always say here, if you don't want to deal with your spouse's tax mess, don't file jointly because then you are going to be jointly liable for that tax debt. Okay. But if this deduction would allow you all to get a refund that may cover their back tax debt, it may be something you want to consider. Another scenario where people file separately is if you are applying for an income-based repayment plan for student loans. Okay, so again, something to talk about with your tax professional so you can weigh those pros and cons. Now, This is the stuff that I like, you may not care about, but just in case you want to dig in a little bit deeper on the bill, the new section that was created to cover the criteria for this bill is Section 225, okay? And that is what was actually written into law that allows us to have the deduction on overtime. Now, something else that I want to point out is that this has to be qualified overtime compensation, okay? So it has to be the compensation, it has to meet the terms made under the Fair Labor Standards Act of 1938 for the money that is in excess of the regular rate. Why is this? Because if we have an employee who works 40 hours, the amount that they're paid for hour 41 through 50, they're not going to be able to write off that entire amount. Instead, the law specifically allows the deduction for the amount above the regular rate. So let's say, for example, just to keep numbers easy, you're paid an hourly rate of $10 an hour, okay? So for you, overtime would be $15. So if we work, not we, but in this example, you work 10 hours of overtime, that would be $150. According to the law under Section 225, you are not going to be able to deduct that $150. Instead, you are going to deduct the premium rate. So only the amount that is over the base rate of 10. So instead of it being a $150 deduction, instead you'd be looking at a $50 deduction because we're taking the overtime rate of 15, subtracting 10 and getting that $5 premium rate. And then we're going to multiply that by the hours that you worked, and that's how we're going to get the $50 deduction. Okay. Now, I do want to also point out that something that was also incorporated into the One Big Beautiful Bill Act was no tax on tips. I'm going to cover that in next episode, but I do want to just note here because the law says it specifically, anything that qualifies for qualified tips to be excluded is also going to be excluded from overtime compensation because they're not going to allow you to double dip there, okay? But again, I'm going to dig into that a little bit deeper in episode 65 when we cover no tax on tips. It's also good to note that no tax on overtime goes into effect for this tax year. So when you go to file your tax return this spring, your W-2 is going to look a little bit different because it's going to be your employer's responsibility to include the amount of qualified overtime compensation on your W-2. So that amount will actually be broken out so that if you self-prepare, you'll be able to see what is going to go in as overtime and then figure the calculation for the deduction. Or if you're working with a tax professional, they're going to know the appropriate amount. So we got a lot of changes this year that are going to actually benefit some folks this year, which is a big win for those who have to work overtime. Okay. Now, it goes into effect this year, but it is not a permanent change. It's only good for tax years 2025 through 2028. So let me tell you how he's kind of set up his predecessor. We have this amazing benefit for people who have to work overtime. They're going to potentially not be taxed on that if they qualify for this deduction, but you file 2025 in the year 2026, and then 2028 will be filed in 2029. Anybody know what's going to happen in 2020 or 2030 when 2029 is filed? This deduction will be gone, and Donald Trump will be far away from the office in the White House, which means the effects of not having the deduction he won't have to deal with from the American people his predecessor will. Now, another thing to note with this, the taxpayer who is earning the overtime, in order to qualify to take this deduction, they must have a social security number that was issued to them as a U.S. citizen. And the issue date must be before the due date of the return to get the deduction. So that means that we're going to file these returns. Woo, sweet Jesus, there have been a lot of changes, but we may still be looking at an April 15th tax deadline for next spring. If that's the case, a taxpayer who wants to qualify for this deduction must have a social security number that is issued to them before April 15th of 2026 to take advantage of this deduction for the 2025 tax year. Okay? Now, I know that I've shared a whole lot, but I want to do my best to make sure that you understand how this law may impact you as an employee working overtime. I most definitely hope that you can take advantage of this deduction, but I also want you to know that this is something that people who work overtime need to be aware of so that they can pay the least amount of taxes as possible, right? It is expensive outside. So I'm all for you saving all the money that you can legally. So I'm going to also ask you a favor. Will you share this podcast out with family, friends? Share it on your social media because you'll help me as America's favorite EA with my personal mission to fill the tax literacy gap one taxpayer at a time. Usually we talk about tax relief and people that are in tax trouble, but my passion and heart is to educate people so that they are not abused by the tax law, but instead can use it to their advantage. So every time you play an episode, thank you. Every time you share an episode, thank you. Every time you give me feedback about what you want to learn, you're helping me help you and to help the American taxpayer. Now, at the end of this, I do want to say it would be remiss of me if you do have a tax problem that you need help facing the IRS with. You can always book a call with me at www.bowenstaxsolutions.com to see if you would be a good fit to work with me in that capacity. I'll see you all in 2 weeks for episode 65, where we're going to dig in deep to no tax on tips. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.